because,
I'm
see,
trying to dump it.
all right, well, trying is they're 35.60, you're 35.50, you always got a way out. However, now let's watch what it does before you do it. You got to know that you always have a way out. Don't worry about getting out. If you need to get out,
I'm out.
okay, because what I was going to tell you in the execution, as long as they're going to be 35.50 below the market, you know you can always get out. I got to give you an A plus at 35.50 entry at a $52 close to 60 cents above that markdown with an intraday 44.50 high. That was still talent. The problem is that the amount of short-term exuberances that are currently playing their role, okay, is that you have a one-sided market that has just been short covering. It's been all headline and rather Apple, FOMC meeting. Hey, it's all okay. We're going to be accommodative. Hey, don't worry. Don't worry. We want the economy to grow. We'll be accommodative. We'll do whatever. They're building that highs up in here, but the problem is, you look at the amount of exuberances that you have pushing it. And then when you do get your pullback, it's not your normal trading ranges when the majority of the crowd is all on the exuberant side, and that there's a lot of electronic stuff going up in here. But those entries were excellent. And that every time this thing has been dipping, when you got the announcements, those were the breakouts and the retracement levels. So the volatility is clearly established that you don't have a fair playing field. And risk management, once again, is that normally you would reverse and come all the way down here in normal volatility. So you come up, you test it, you come back where it started, 24.45, and you would come all the way back down in volatility now. You got to know, though, that the ratio trends are extremely out of balance. And what do I mean by that? Mathematically, the minute that they pull back, people are jumping in and putting on risk, where before, when you had pullbacks, they weren't putting on risk. As they hear the messages and headlines in the media, they continue to increase their risk, and that's what happens at tops and bubbles that get created. But in the short term, everyone, in the very short term, everyone, they get very exuberant. That's how tops get put in and bad things happen. We clearly showed how everyone got stuffed in the 2011 top. I mean, if you didn't think that wasn't exuberant, but you know what can happen to them. We're in that mode right now. So these exits were all done appropriately, and that was an MMT. Normally, if we didn't have the amount of short covering and other things going on, these trades are wonderful. They'll return that way because the higher that they get, you're looking for the reversals in the futures. And so we're going to conclude it. Very good job. You did well. You hear me? Because there isn't any more you can do. There just isn't. So that's as good as you can get. You can't get better than that.